Some eye-popping numbers coming your way, and it's not very often that this happens, that a stock goes up 700% in just 2 weeks, but this has happened in the form of Vinfast, which is a Vietnamese electric vehicle manufacturer, which as of closing on Monday became the third most valued auto company in the world. Now, Vinfast went public through an SPAC merger on the 15th of August, and as of closing on Monday, it had a market capitalization of $191 billion. Now, it crossed 200 billion intraday, ended at 191 billion, second only to Toyota, which is at around 220 billion, and Tesla, which is far ahead at $750 billion in market cap. Now, I'll give you an example that explains the gulf between these companies. Now, as of last year, which is 2022, Toyota sold 10.5 billion vehicles. Now, in comparison, Vinfast sold only 24,000, and that explains the kind of gulf that is there between these companies. Now, Vinfast, as I said, started trading on the 15th of August, and since it has listed, it has had some extremely wild swings. The stock went up as much as 254% on the day it listed, and since then, over the last 3 sessions as well, the stock has moved up 32%, 40%, and 19% respectively. Now, there is a reason as to why the stock has seen such sharp swings, and that is because it has an extremely low float in the market, which subjects the stock to extreme volatility, and that is because 99% of the float is controlled by the company's founder, who also happens to be Vietnam's richest man. Now, as of closing on Monday, Vinfast shares are more valuable than half of the constituents of the Dow Jones Industrial Average Index, and I will name some. There are Goldman Sachs, there's Honeywell, Boeing, Intel, Disney, Nike, some big names. Now, as of last year, Vinfast sold 24,000 vehicles, and this year it is hoping to sell close to 40 to 50,000. The management also said that they are likely to break even, not turn a profit, but break even by the end of 2024. Now, as I say all of this, it gives me a sense of deja vu, because all of this exactly the same way has transpired before as well. Now, at the height of the IPO frenzy in 2021, a company called Rivian Automotive came out with its IPO, which also happened to be the largest and the biggest IPO of that year. Now, shares were priced at $78 a share, and within 2 weeks of listing, the stock went up to as high as $178. Well, nothing wrong with that, but the problem was that Rivian had zero revenue to show for, and that is because of the frenzy that was there in the market is what led to the stock going as high as it did. Well, fundamentals did eventually catch up with Rivian, and as of closing on Monday, the stock is languishing somewhere around the $20 mark. Now, we are not saying that Vinfast will meet a similar fate, but the way things are looking, it does look like a car without brakes, and if I was Rivian, I would be telling Vinfast right now, मैं ये खेल पहले खेल चुका हूँ.